Hello and welcome to Money Control. You're watching our special conversation series on Charlie Munger, the trusted partner of Warren Buffett, who influenced him to think about stocks in a way that went on to become the centerpiece of Buffett's investing style and success. He died on November 28th at the age of 99. Of course, he influenced Warren Buffett profoundly, but Charlie Munger has also been a great teacher who has taught the investing world simple but effective ways to think and learn about investing while avoiding accidents. So I have with me a very well-read practitioner of value investing. He needs absolutely no introduction, Sanjoy Bhattacharya. So thank you so much for joining me.
That's really kind of you to have me. Thank you.
So first of all, when did you get introduced or get familiar with Charlie Munger? What you have met him, so what was that experience like, and what kind of impact has he had on your life, lessons you take away from him in terms of investing?
So I first came to know about Mr. Munger in the late 80s, I think, when I started reading the Berkshire Hathaway annual report. That was my first introduction. And of course, it was much more about Buffett than Munger, but I the references to him, and later on I discovered many of the ideas that Warren Buffett propounded were actually driven by Mr. Munger's thoughts on investing. And that was my first introduction. Then I think sometime in the mid or late 90s, I forget the exact year, but it was I think 96 or 97, I forget, when I visited Omaha to attend the AGM in person with my good friend Ramdev, was the time when I personally made the acquaintance of Mr. Munger. And needless to say, it was well worth the trip to Omaha to meet both of them.
Right.
I think all of us who've been, in fact, I got a dollar bill autographed by him, which I still have with me. Right. But all of us who met him came away, I think, with the idea that he was an intellectual colossus and who spoke very little. One of the most frequent comments, and I think it summed up how he spoke and how he communicated. It was very brief and concise in what he said.
Right.
And the famous one is, so now Charlie, your comments on this, and he would say nothing to add.
Nothing to add, yeah.
So that's my abiding memory of my first meeting with Mr. Munger, and I understood then and there that a person who can say that not only has great humility but also great insight. Because I think most of us naturally want to hear the sound of our own voice, which Mr. Munger clearly didn't want to.
Right.
And then later on, I became much better acquainted with him when I read a book called Damn Right, which is really the story of his life in some way.
Yeah.
And I would recommend, if you want to understand more about him and how he evolved as an individual, it's really worth reading that book. And my final and most powerful sort of Munger influence was a book called Poor Charlie's Almanac.
Correct.
And there's another one which is more recent, which I've also read, but I think Poor Charlie's Almanac ranks in my mind as the ultimate wisdom of Munger put in a concise form which people can sort of take in small doses. You can't take in Munger in one huge dose. You'll just be flattened.
Right.
He's such a colossus and so wise
right.
that you just can't do it.
Right.
I think that book, the Poor Charlie's Almanac, the latter book, The Wit and Wisdom of I think it's called The Wit and Wisdom of Charlie Munger.
Yeah.
And there was a lecture that he gave at, I think, is the University of Southern California at LA.
Psychology of
human
misjudgment.
I think these are, when I look back, my three most abiding sort of templates for understanding his wisdom. So I hope that sort of tackles.
Absolutely. So in what way has he influenced you? Tell me, 2-3 things that you have really taken away, one from his life, second, how you have imbibed that in your, investment thinking, decision making process.
Yeah, I think the first one, how he has influenced me, is, I don't know, he said something like, and I forget the exact quote, but it had a profound impact on me, and I've followed it since, not with any good effect like he has, but in the hope that one day it will lead to some positive outcomes, is read. And many people describe me as being a guy engrossed in a book with 2 legs sticking out. So that had a very powerful impact on me.
Right.
And he said, if you want to learn, one of the things that Mr. Munger really cared about was history and learning the lessons of history.
Right.
And he said that the more I read about history, the more I'm informed about the future. And he also said that all the great teachers I had, I never met in a classroom. I met in the books.
Right.
And amazingly, for people who are not fully acquainted with his educational background and the early part of his life, he trained as a lawyer.
Correct.
Interestingly, very few people remember this. And there's a funny incident about this, but we'll skip that. He also, I don't know whether it was a degree, but he acquired formal education in architecture at a very young age. And he offered $100 million to the University of California to build dormitories which had no windows.
Right.
It's amazing. It's so counterintuitive, but there's powerful reasoning behind it. But so I think not many people know, given how much he has contributed to economics, to psychology, to physics, to our understanding of human behavior, that he had no formal training or education in any of these.
At all. Right. Right.
In any of these subjects.
Right.
And so that thought of his, that read, has truly sort of been an inspiration, which I've tried to follow. I think the other thing which I was very impressed about, especially when I read Damn Right, and I should quote so that I don't waste people's time, he said, and this is the thing about Munger that strikes you the most as an individual, he says, always take the high road. It's far less crowded.
Right, right.
So I think this is a comment that speaks about the importance of character, and not many people relate it directly to investing, but actually, as Buffett said in one of the annual reports, he said, investing is 90% character, 10% intellect. I think Munger got this exactly right. And till you sort of put in the effort, and it's very difficult to take the high road, incidentally. It's not easy. But till you try to get there and do it yourself, you don't realize A, how difficult it is, and B, how rewarding it is. So for me, that's something I'll always remember Mr. Munger by, because it had a huge impact on me. The third thing which I would say is, though it I think came naturally to me because, funnily because I'm just the reverse, I don't have anywhere near his intellect, but it appealed so much to me that I follow it, which is keep it simple. Don't do anything that you don't understand. Keep it really simple. And remember your mistakes. Never try to get rid of them, even in your mind.
Right.
Acknowledge them, not personalize them, but acknowledge your mistakes
Right.
and use them to learn and to not repeat them in future. So I'm often told that I am obsessive about mistakes. Blame Charlie. It's not me. So I think these are.
Did he say you have to make mistakes?
He said yes. He did, in fact. He said that if you live a life without making an adequate number of mistakes, it's not a life fully lived. It's funny that you picked on that, but it is there as one of his most memorable quotes. Yeah.
Okay, fair enough. So I want you to expound on what you said, this high road and character. You know, investing is about character.
Yeah.
In the context of stock markets,
Yeah.
how do we interpret this?
Right. This is, thank
Because
you for
I mean,
giving
the
me.
only thing I think of when we think of character in the context of stock markets is governance, corporate governance, and it's all grey. I mean, it's.
I think
so
it's
you
actually
only
a
agree-
sham and a facade, a very well preserved facade, if I may say. But Mr. Munger made a comment on corporate governance, which I think I'll very quickly put in place because I think it's so powerful again. He said, at the end of the day, governance is about capital allocation. And the people who participate in a rational process of capital allocation do a great job of governance. It's not about compliance, and it's not about rules, and it's not about regulations, and it's having subcommittees of the board and none of that. By that yardstick, I think corporate India has a long way to go. Truly long way to go. But let me come back to your
point on character.
Yeah. So, if you think about investing in broader terms, and maybe I should repeat another of his very quotable quotes. I will omit the vintage Munger style. He actually put it slightly differently. He said, sitting on your ass, but I won't use that phrase. He said, the big money is not in buying or selling, but in the waiting.
Correct.
And this, I think, is a giveaway because it's about patience. What he's really advocating here is the power of compounding. How does compounding get a chance to work? It's the single most important thing in investing, the power of compounding. And it can only work if you sit and wait. So that is one illustration. And I think being patient is part of your character. There are people who are impatient. In fact, I'm a good example of a guy when I was much younger, 40 years ago, very impatient. I always wanted a quick fix. I wanted answers, I wanted feedback that was almost instantaneous and immediate.
Right.
And one of the things I learned, not necessarily from Mr. Munger, but which I came to appreciate vividly as I read about him, was that patience doesn't have immediate payoffs, but there are no payoffs if you're not patient.
Right.
Buffett talks about waiting for the fat pitch.
Yeah.
He talks about having a ticket with only 20 holes in it, which you punch.
Correct.
So in a lifetime, you can't make more than 20 trades.
Yeah.
Everyone in India would flunk that. We'd all get an F. And it's a reflection actually of our character at some level. So I think to say that I love...
Is there not a real challenge to that? So I was about to ask this question because when you pointed out this thing that investment success is not in buying or selling but in the waiting. Now last 15 years after the after the 2008 crisis, there has been so much liquidity in the system that a lot of value investors, including Buffett and Munger, have been criticized that they're sitting on so much cash and that sort of get them underperforming for the next 10 years. It's only after COVID that you've got this, value resurgence. So that, and if 10-year period
are short. In the minds of Munger and Buffett, a decade is not important. They're happy to wait out a decade. And I think we just don't have that mindset. We're so concerned about net worth. We're so concerned about beating an index, and yet we're all
But
bucks of Buffett and Munger.
how do we know? Again, many of these things unravel, or we get to know only in hindsight, right? And if you've missed out on opportunities for 10 years, how do we know that this is not a new normal or a new reset?
Okay,
And
so
that is not.
let me put this in perspective, because we hit a $1 trillion market cap in May 2007. We are now in November 2023, which is 16 years later. The market has gone up 4 times. Everyone is celebrating the daylights out of the fact that our market is 4 trillion. If you think about 1 going to 4 in 16 years and do the math, it's 9% compounded annually. People rave about how the Indian stock market is the greatest thing since sliced bread. It's not. You had, instead of being in the market, been in cash and deployed that cash at, let's say, 5 or 6%. Because in India, interest rates have historically been high.
Yeah.
You've been able to earn 6.5%, 7% for the best part of that period, the 16 years, except when interest rates really fell to low levels in India. You'd have been able to compound at 6.5%. But you wouldn't have got sucked into doing a lot of things that could have hurt you badly. And in a sense, I think the power.
Now you're
I've cherry-picked
revisiting
a
the
period.
basics, and you're questioning the power of compounding. I mean, where
No,
is 5% and where is 9%?
I'm trying to explain the idea that both Mr. Munger and Warren Buffett talk about. Be patient even with regard to finding opportunity. The idea that in a lifetime, if you make 20 investments, you're fine. But you've got to find the right ones. You don't have to go out hunting every day, every month, every quarter to find a new idea. One good idea a year is actually one too many, as they say, as a joke in the United States. Because it's very difficult to find that one good idea. And there are lots of things associated with being patient and compound. If you don't pay tax for 20 years, let's say there's a guy, he buys the same share as you, and he sells it at the end of each year and buys it back at that price then. And then let's assume there's no brokerage, nothing.
Yeah.
The sheer impact of taxation on the sale has a dramatic impact on your 20-year returns. So the virtues of being patient also include robbing the government. It's a very compelling insight.
Right.
And the reason Buffett and Munger sit on a stash of $147 billion of cash and counting, and I really don't blame them. I think there's tremendous, this whole idea of being rational. Why would you invest in a market which is close to its high in terms of valuation, where there's a massive amount of change taking place in the macroeconomic environment for the worse, where you have record triple deficits, where you have a very volatile geopolitical environment, where the leadership of that nation is at stake. And there aren't any really great opportunities which they understand at prices they're willing to pay. Doing something for the right reason is what is really important to the great investors. The outcome is not important. It's the way in which you think about it and then act. In fact, that's what everyone says, that why do we celebrate Mr. Munger's life? Because he taught us how to think, right? As Anand Sridharan put it.
Yeah.
But we don't respect that in practice. We respect only the outcome in practice, which is sad.
Yeah.
And it's a reflection of how far we need to make the journey to become a more civilized and refined and nuanced investment community. We can't tolerate a year of underperformance. And we all want to be Buffett and Munger. Doesn't work like that. In fact, again, another part of character is how you behave when you underperform. It's something that Mr. Munger spent a lot of time talking about. He said many of the best opportunities arise then. Look at them. The other thing about why you need to understand something very well before you make a decision, rather than depend on dumb luck, is that you need to bring to bear the self-belief that you're doing something smart. Really smart, so you can make big bets. You can't make a big bet if you don't believe in it.
Right.
And investing is about the big, right, winning bets. Now, if you make an investment decision every third day, it's pretty damn tough. You're not going to get it right that often. Of course, you got to tom-tom it when you do get it right.
Fair enough. So moving on, tell me a little bit about this multidisciplinary
thank you for that opportunity. Let me, at least my take on this, which is, I think, very different from the take of, I'd say, 98% of people. But for once, I have a lot of, I think that at least, while I may not have got it perfectly right, I'm approximately right. So, this is how it goes. So, he had this famous thing called the lattice work of mental models.
Right.
And people respect him and admire him for his multidisciplinary intellect. So, he knew a heck of a lot about psychology, he knew a lot about economics, he spoke about physics, he spoke about biology. A true polymath, I think, is the word. If the world of investing has seen a polymath, Lord Keynes, Charlie Munger. The idea is to think in multiple degrees, not first order thinking, but third order, fourth order thinking, and to be able to use the lessons from one particular context to make it appropriate to another context and look at it holistically. To bring multiple, put multiple microscopes to work in examining what is it that we can learn from different subjects and different contexts when things like this happened in the past, and therefore how should our mind work in arriving at a decision. So I would say reasoning by analogy is really what he preached. In Mr. Munger's Bhagavad Gita, funnily, contrary to what people believe, it's not about being rational.
No, you have to explain this.
So, there are many times when by experiencing or seeing different kinds of events or investment occurrences, the very fact that you've experienced that event sharpens your intuition, sharpens your creativity, the way you think about opportunities. If you think about opportunities exactly the same way as everyone else thinks about an opportunity, your returns are going to be the same as everybody else's.
Right.
So you have to think differently, creatively. How does that come about? It's not just about being rational, it's also about being creative.
Okay.
There are many times, I'm going to give you an example, and you must permit me that liberty, and then I'll hopefully keep quiet for some time. But the most famous example of this is one of the most renowned cardiologists in the United States in the 1960s, and I forget his name. He was Dr. I think Caldwell or something. I forget the surname, but very renowned cardiologist. So he had a nurse in whom he had great faith. So when people were brought to the ER of that hospital, the emergency room of that hospital, when she was there's always huge pressure on beds to admit people who come to an ER. The nurse would observe the patients coming to the ER. Okay? And then she would write on a piece of paper, admit, do not admit.
Okay.
And everyone believes they're having a heart attack. Every single person who has come to the cardio ER believes they're having a heart attack. But the nurse's success rate was so high that it was stunning. And why was it? She was not a highly trained, PhD in medicine or an MD in medicine. She was not, she didn't have huge amounts of data in front of her. She didn't have any great analytical insights. But by observing and looking at patients and the kind of symptoms that they were exhibiting and how that was manifested in their reactions, in their faces, in the blueness of their cheek, whatever.
Right.
Multiple symptoms, not multiple. It's not just one thing that you're huffing, panting, that clutching your chest. There are multiple things that she put together in a simple model in her head, which had come by experience over 25, 30 years. And she was able to then say, with a very high degree of accuracy in a life-threatening situation, how to behave. There is also this study about a person who used to be exposed to people who wanted to commit suicide. Same story, same ending. The tone of their voice, the method in which they articulated responses to what you asked them, to various things. And to be able to save human life by preventing people from committing suicide is, I think, far more important than making the right investment decision. In my book, at least. And again, not a trained person, an auxiliary nurse. So what does that tell us? The power of experience, of being able to relate that to many, to put multiple things together, to relate that and then to make a decision. And this is really the essence of Mr. Munger. He did this in investing. That's why you need the lattice work of mental models. What Munger advocates is applying context about when other people were greedy, what happened to them, to learn from their greed, and then to think about investment decision making. And it's sometimes not easy to spot greed, by the way. It doesn't stare at you in the face and say in 24-point uppercase, this is greed, raw naked greed.
Right.
You think it's perfectly rational. All the people buying AI companies today, do they understand AI in that great depth? And the consequences of how it might unravel in the future, the regulatory environment, the risks, the damage it can do. No, they don't. But they want to be the guys in the gold rush. So, that's really what Mr. Munger taught us. That use your understanding from different contexts, bring that to bear today, and then act and make investment. So it's not about, as people keep on saying, just about being rational. It's about using certain fragments of information from earlier parts of your life, putting it together in a framework that is robust, analytical, and combining it with all the different things that you think might have an impact. That is really the lattice work of mental models.
So what you are underscoring here, Sanjay, is the value of experience. You're saying that you should have. So my question is, so by the time you accumulate this level of knowledge and experience, a large part of your journey is done.
No.
So you want to get rich before you get old like
That's
Buffett.
Another thing Mr. Munger said. He said, don't be in a rush to get rich quick.
But if you look at their own track record, Buffett was, in his partnership, he was the best.
You look at Buffett, how much was he worth at 60?
That is because of the power of compounding.
That's it.
But in that context, at that time also he was outperforming, hand over fist, he was making money.
The outcome is that he was outperforming. The point is that he had a purpose in terms of what he wanted to achieve in his life. And the very fact that
which he said he wanted to get rich.
Well, Munger
Buffett
doesn't say
definitely said that.
Buffett, I think, is a little bit contradictory because in many ways...
He always said, I wanted,
Yeah,
I was sure, I wanted, and he was also sure he would
and
get rich.
The evolution of his life where he sold, second-hand golf balls and, so you're right. His father was a senator in DC. It's absolutely right. But in Munger's case, he said, I want to make money because I value independence. I desperately value my independence. My ability to do what I believe in. I don't want to buy Ferraris. That's one of his quotes. Again, I've put it a little upside down. But he actually said that. And I think most of us would be well served by understanding that. And he also said, don't aim to get rich quick. It's dangerous. So, to your point, that all of us want to get rich quick. Of course, all of us want to get rich quick. But the life of Charlie Munger is an illustration of how the better way, the smarter way, the more effective way, the chance of getting seriously rich is the other way around. Patience, wisdom, reading, character. If I had to, my mental lattice work of models would include these.
Sure.
Because that's what he really taught us.
Can you pluck out three or four important mental models from Munger?
Yeah. And I mean, there's so many that he taught us. It's not difficult to come out with two or three. But I think the most famous one, which everyone knows, and I don't want to sort of bore people to death, is always think about how, if you look backwards, how it would turn out to be. He said it much more succinctly. He said, invert, invert, invert.
Right.
Yeah? Which means that don't assume best case, don't assume you're right. Challenge yourself. And always think, how am I wrong? That's very powerful as a mental model. The second one, which he again spoke about extensively and is very important, goes back to the economics of, or the lessons of compounding,
Yeah.
but not often seen that way. And it's become a cult following kind of thing in India now. Quality. In fact, people say he converted Buffett from buying cigar butts
Yeah.
to buying high quality companies. So his idea was this, very simply put, that if you buy a business that is consistent in terms of the cash flow that it can generate over time, then you can afford to, you have a much greater chance that the power of compounding will work in your favor. Because the multiplicative effects of cash flow accumulation is just, the human mind is boggled. It can't imagine. You can't imagine what it's like. You know, if I asked you what's 2 to the power of 64, which is 64 quarters, 16 years, you wouldn't know the answer. There's this famous story of the chessboard and the guy who said, I want 1
Yeah.
grain of rice on
Correct.
the first one, 2 grains on the second one. And by the time he reached the 64th
Yeah.
square on the chessboard, the king had gone bust.
Correct.
I think that's what Munger is really suggesting. That's why he says that you need to buy businesses that are consistent, that are predictable, that will continue to generate cash flow. So that's the second one. I think the third one, which is also very important, and which comes from his understanding of human character, is that associate with people who do not think short term when they are running your business for you.
Right.
Because again, it's partly the power of compounding and the chance that that might get upended, but more importantly, that you can't trust them.
Right.
And if you can't build that trust because of his reputation, his integrity, that manager's ability to make sensible capital allocations, you are not the guy running the business. He is your steward in running the business. And Buffett says this again and again in terms of the people whom he has running his businesses and the tributes he pays to them. It goes back to this idea that you must deal with people in your life, in business, who are running businesses, who have the highest integrity and reputation, whom you can trust. And conversely, if you become a very large shareholder, they can trust you to behave sensibly as a large shareholder.
Right.
It works both ways. In India, we have rarely seen the second consequence. But in the US, you do have that consequence. So I think for me, these are, I guess, you know, what is important. The Collapse of Nations by Jared Diamond, which of which Munger was a great fan, is also a fascinating. It's not Munger himself, it's Jared Diamond, but what makes very, very, very large institutions or entities fail? Why do they collapse? And that's one thing that I learned from collapse, but Munger is so much in, he has such high praise for Jared Diamond that I think in a sense it's what, Jared Diamond just wrote it down first. Munger would probably have written down the same damn thing if he'd, been there. So,
Sure.
so that I would say.
So another concept I wanted you to talk about is the Lola effect. How can you relate it to something that is happening now? For example, there is the India growth narrative that multiple things are coming together, whether it is geopolitics or the domestic investment cycle going up. So there are 4 or 5 factors that are coming together.
Yeah.
Right, and these, according to Munger, when you sort of
combine them
and it comes to that level of mass, then there is nuclear explosion. But
Correct.
if it doesn't, then it fizzles out and nothing happens.
Correct.
How do you relate to that?
Relate that to India.
To India or any current narrative, and how do you use it in the investment framework?
So I wouldn't relate it to India at the current moment, because I think some of these factors are a trifle overblown, and the evidence is also not compelling to say that we're at that point in time, standing on the cusp of a truly explosive period of stock market returns. Though no one can ever judge future returns. It's impossible because again, it doesn't sort of follow rationality. The madness of crowds is something that is unbelievable. But the context to which I'd like to relate Lollapalooza effects is something all of us experienced, and it was pretty much there to see and understand, is the rise of Indian IT services in the late 90s. I think, post the Infosys IPO and, then we had Y2K and so on and so forth. And a bunch of things came into play there. So one was, as Mr. Narayan Murthy put it very elegantly at, I think, one of the meetings with analysts, American revenues, Indian costs, which is really labor cost arbitrage. But it's an incredibly powerful thing that the world needed at that point in time.
Right.
And it has lasted, incidentally.
Right.
25 years later, 30 years later, it's still the case, though to a lesser degree. Second, it's about, who are the guys who want to do this humdrum work, but the work needs to be done. So in America, finding a white guy who is a coder, to deal with how you change dates in the year 2000 when the turn of the decade, no one's going to sit down and do it. But it has a all-pervasive impact across all aspects of, business. So that, quite apart from the cost element.
Right.
Yeah, that's a separate element. I think the third element, which is very, very important and which aided the sort of this thing of that, is that we also had the, how do I say, we had a huge, at that time, which is now no longer the case, a huge pool of because the industry was very small then, of very talented young guys coming from some of the best institutions in this country who wanted to join IT services. If you look at Indian IT services in the 90s, they were all from the IITs and from the best Indian tech institutions. Today, many of the guys are BComs and people who are coming from diverse backgrounds. This is not, I'm not trying to make a snootish comment on it, but it has changed things dramatically, including productivity. So the productivity effect, thanks to the talent that was available, gave us a sustainable cost advantage and also allowed us to leverage with that same company in the next assignment. Okay. The fourth thing about Indian IT services, which I think is very, very important, is that, and this is key, though underestimated, it gave Indians the self-belief that they can compete globally.
Right.
And it wasn't there. Till the late 90s, until Indian IT services happened. Every Indian you asked, if you told him made in India, he would laugh at you. This is what changed dramatically. In fact, it went berserk. And the last thing is this growth opportunity. It's a global growth opportunity. Translatable across country, across geographies, translatable across industries, translatable across technologies. A phenomenon. It's a multi-decadal opportunity, still continuing. So that to me...
So today, will you not relate it to manufacturing in India?
No, certainly not.
Why not?
Because we're not competitive. We don't have that massive cost advantage that we had with IT services. Many people have already written the demise of China. In my mind, I don't think that's happening. And if you look at in manufacturing, there are many parts of manufacturing where we just don't have. We are at the bottom end of manufacturing, what I call converting. Buy raw materials, convert to a simple spec, and resell. But we're not into the elements of manufacturing that are critical to global success, design. Another thing with manufacturing is we don't have scale. We need to have scale to become globally competitive in many, many areas.
No, if you just take a big picture view in terms of how, globally, of course, you dismiss the fact that China,
the demise of China, I think, is premature.
Overdone. Okay.
Massively
I
overdone.
think one important narrative is that we will gain market share from China, and we'll
maybe
also
in the short run, but not
so
decadally.
it's not a long runway.
Not. I mean, it'll be. I don't know what it'll be like, but I'm not willing to bet that 10 years later, that China won't be a very meaningful competitor.
Tell us some of your favorite quotes from Munger.
Yeah, I'm not going to make this too long, but there are two or three that I would like people to know, because they're so profound and important and underrated.
Okay.
So one of them is, knowing what you don't know is more useful than being brilliant. I mean, it illustrates all that Munger stood for, though he was brilliant. But I think this circle of competence idea, this idea of, and also you spoke about the underperformance in the last 10 years. It is because they have been true to this. That's why they've stayed out of trouble. Unlike a lot of others who had spectacular flashes of success and then disaster. It's too early maybe to say some of this is disaster, but who ventured way beyond their circle of competence in an industry that you know very well. Elon Musk buying Twitter. And it's dramatic. $44 billion to $19 billion in 1.5 years. It may not seem large.
Yeah.
But, or you take Masayoshi Son and WeWork.
Right.
These are celebrated, simple examples. Maybe I'm oversimplifying.
Yeah.
But at least Buffett and Munger may have had low returns. But they've grown, they've kept it intact, they're prepared for a new world. So if you know what you don't know, you're doing all right. And it's very important in investing because, as Mr. Buffett put it, I'm adding this on as a corollary, to finish first, you must first finish.
Right.
So that, okay. The second one is particularly appropriate for India. The habit of committing more time to learning and thinking than to doing is no accident. I mean, investing is really about the story of the guys who make very minuscule marginal improvements every single day of their lives.
Right.
In terms of how they think. To them, eventually, will be great success.
Right. So learning also compounds.
Learning compounds tremendously.
Right.
You're right. It's absolutely right. That's the essence of Munger.
Right.
That's why the two old men are so rich.
Right.
Okay. The third one, and I have a take on this, which is very unpopular, especially on a show, especially on a series which is basically paying tribute to a great man. But nevertheless, I'll have the courage to say it. Let me come to the other one, which is very obvious, and then I'll come to the last one because I think it's not going to make me popular, and it's, I think, more difficult to understand. At one level, it's very simple to understand. But the first one is, a lot of people with high IQs are terrible investors because they have terrible temperament.
Okay.
Again, vintage Munger, and not because he had incredible IQ combined with great temperament. But this saying of his is really, really important to realize. I mean, you got to figure this
So
one
why
out.
does that happen? That is because of
They panic at the worst time.
Overconfidence.
You're a pro, Mahalakshmi, almost like Munger now. But Munger now. But yeah, that's the single greatest enemy, overconfidence. And it is bred by that high IQ. When you're ultra smart, you're overconfident.
I think the psychology
you made my life easy by explaining why it's so profound. The last one, this is, maybe I shouldn't say it, but since I've come to it, let me say it and leave it to everyone to judge. But Mr. Munger said this. He said, mimicking the herd invites regression to the mean.
What does that mean?
It means that there are too many followers who literally want to adopt, not adapt, but adopt what Mr. Munger said. They are not going to have such a bright future.
Okay, okay.
He was a great intellect, profound. He has made huge contribution to investing, but you can't ape him.
True.
You can't be the next Charlie Munger. None of us can be the next Charlie Munger because we don't have what he had.
Right.
So, please, my plea would be yourself, but learn the lessons that he has left behind and think about those lessons in context. The context of Mr. Munger from 1924 to 2023 may be significantly different than what awaits the young guy born in the year 2000 who will live till 2080.
Exactly the point I want. I mean, so this would have been a very good place to end also. But one last question is, what are these lessons or
Timeless
takeaways?
lessons.
Yeah, timeless, and things that we need to refresh or renew, rethink things that they've given us.
I think those are the ones we spoke about, some of them. Big opportunities, waiting for them, understanding them, and when you find them, acting with really significant conviction. And to that, the completely logical Munger extension, own 100% of the business. Seas Candy, Jaico. Many, they bought this Burlington Northern Santa Fe.
Yeah.
Many of the businesses, they own 100% of it.
Yeah.
Actually, their minority investments are now significantly smaller than their majority investment. That's the acid test of what they say. Understand the business. Based on that understanding, if you think there's a serial long-term opportunity of being able to compound cash flows at a reasonably high rate relative to inflation, own it and own it really big. So, I think that's timeless. That can never go wrong. I think the third one, which will I'm reminded of Morgan Housel's latest book, Same as Ever. Maybe I'm obsessed with Mr. Munger, with damn right, with this whole idea, even across, is aspire to living a life which will reflect your obituary. If you want an obituary that is kind and charitable, then live that life now.
Right.
So, to repeat myself, take the high road.
Right. Sure.
I would say that's I mean, there are lots of things. One could spend a huge amount of time speaking about others. But I think to me, these are the big takeaways, if I may.
Sure, sure. Thank you so much,
Not at all.
Sanjoy. Absolute pleasure talking to
Wonderful
you as
chatting
always.
with you, and it's really nice that you're putting this together.
Thank you so much.